Welcome, episode 3 to Z Knows Best podcast. I'm here sitting with Riyaad, who is an insurance entrepreneur. Thank you for coming and taking the time to sit with us today.
Always happy to be here and always happy to help others. And I look forward to today's episode.
So Riyaad, explain to us, how did you get into insurances?
That was actually a very interesting journey. I've been in sales about 22 years, but I started my first practice about 16 years ago at the ripe old age of 26.
Wow.
Sorry. I said 6 or 16? 16 years ago is when I started. So, yeah, I'm getting older.
It's okay.
Yeah, I started about 16 years ago. And part of that journey is I was looking for a career path that was going to create the income and the lifestyle I wanted, and also create, time balance. But like anything else, in the beginning, when you're building something, you have to put in a ton of time. And overall, it did slowly progress into hiring staff and building a business with my practice. But I started 16 years ago. At the time when I started, I had no money, no clients. I had no car actually for about 4 months.
Wow.
And
that must have been rough.
Yeah, I always tell everyone, if you ever see the movie The Pursuit of Happiness, that's basically me.
Wow.
Started off and like I said, no money, no clients. At the time, I was on a strict budget. My office had free coffee, so I drank coffee for breakfast, coffee for lunch, and I would spend $5 on dinner. And that's how I started. I just kept working hard. I wasn't afraid to try to talk to new clients, make good relationships with other business people. And over time, what I did was I slowly bettered my skills, hired a coach for 5 years, invested in myself. And within 3 years, I became one of the top life insurance producers in thank you, in the country. And that was around, 2011. And over time, I just kept building on it. And within 5 years of my career, I went from no money, no clients, starting from scratch. There was no salary, by the way. It was just all commission and bonuses. But within 5 years, I became a managing director of a Fortune 100 company. And I was only maybe 30, 31 years old at the time. And
pretty impressive.
Yeah. I mean, the other 3 managing directors that were there were all 55 and older. And I was the youngest one at the time. So I kept working hard. And the reason why I liked the insurance industry is because you're rewarded based on your productivity and based on, the effort that you put in. So you're rewarded, but you're also rewarded in a different way, which is you're helping clients along the way, and you're helping them to protect their business. You're helping them to protect their family. You're helping them to create a legacy that can last many, many, many years for their children. So that was also very fulfilling for me. And that's what drove me to work so hard and to build a really solid practice. But sorry for the long story.
No.
But that's how I kind of got into the business. But I'm there 16 years now and, basically have about 2 practices. And we have about 3,000 clients in New York that we work with.
That's wow. Like drop mic after that. That was a beautiful success story. I'm sure a lot of people could relate to going through struggles in the beginning and trying to figure it out, navigate. And look, you came back out on top, you're killing it, and you're still killing it, right? So kudos to you. So let's dive into insurance. Yes. What is life insurance and why do you even need it?
Life insurance has been around for about 200 years, roughly. It's actually one of the oldest forms of insurance. And originally, just when it started, it was because people over hundreds of years um, started passing away, and the families needed help to for burials and for to help sustain the family members. So that's how it kind of got created many years ago. However, over the 200 years, it's evolved into a lot of other things. I would say it's a underutilized financial tool. And the reason why I say that is because life insurance can serve many different types of purposes. Besides protecting a family or a business, there's a lot of tax advantages. There's also a lot of other things that life insurance can do, which I'm sure we'll get into.
Right.
And those things basically can help create generational wealth for a family.
And who doesn't like money?
Exactly. Life insurance is actually one of the most loving gestures someone can do for their family or their business. And I feel like a lot of people don't utilize it. I don't know the exact statistic as of today, but I believe it was somewhere around half of America doesn't have life insurance.
Wow.
And
due to like just not knowing about it, just not signing up, like what do you think is the reason for that?
I think there's a mix.
Yeah.
Some people are afraid to even talk about it because they don't want to think about death.
Got it. It could be a sensitive topic.
Yes. Yeah. So that's one part. And I think the other part is that some people don't have a reliable agent or financial person that they can go to and say, hey, you know what? I have 2 kids. I have 3 kids. I have a wife or a husband at home. And, no one's ever like reviewed this with us. And the first step is really just reaching out to someone who is knowledgeable and willing to help guide that family. So part of it, it's a mix of things, but I would say part of it is creating more awareness. Part of it is trying to have, create the question like, interactively, they try to, most people just don't have someone to talk to about it and they don't want to talk about it, but it's important.
Thank you. Thank you for sharing that. So, Riyaad, what are different types of life insurance policies?
So for life insurance, I would say most people tend to fall into 3 categories of life insurance when they're looking. There's many different types, but if I keep it general, there's term insurance, there's also universal life insurance, and then the oldest one is whole life insurance. So those are the 3 main types of life insurance that people use. I would say each one serves a unique purpose and each one does different things.
So can you share some factors that the agent considers when they're like, I guess, drafting up a plan for a client? Like, how do you know, okay, this person should probably get whole life or this person should get this type of policy?
That's a great question. So what we try to do is we have an initial meeting, and a lot of people, it's not like car insurance or house insurance where you pick up a phone and you say, hey, I need a quote.
Right.
Tell me what how much is it for 200,000, 300,000 of life? That's a basic way of trying to do it. What we try to do is we try to have a discovery meeting with the client. So we'll have a sit-down meeting because it is an intimate discussion and it is something that takes time and you have to understand the client. So for example, a single mom with 2 kids, there's a different need and a different type of policy that might be better for her versus a client that you sit down with that maybe just bought a business or maybe just got out of college or just retired. There's different needs. So what we try to do is have a discovery meeting, which typically is about an hour long. And we ask some specific questions to get to understand that client's situation when it comes to their goals. What are they trying to achieve? How much coverage are they looking for? What's the right type of coverage? And we have to kind of educate them on what's out there and give them a better idea of how they can utilize it and what makes sense for that specific person and that specific family or business.
And at what age would you recommend that someone should obtain a life insurance policy?
So I always tell everyone, the younger the better.
Why?
So life insurance is based off of many factors, but one of the factors is age. So the younger you do it, the better it is for you. I have clients who have life insurance policies on their 1-year-old, and I have
Wow.
and I have clients that take out life insurance at 70 years old. Two different stages of the game,
Right.
and it really, there's a lot of stories I can tell you. I've been doing this, like I said, 16 years, and I've seen the good and the bad, and I've seen, if you don't mind, I could share a quick story.
I was just about, the floor is yours.
Okay, so I had, one example, college student, studying for finals, like 20 years old,
Wow.
gets a brain aneurysm and passes away in her dorm. Unfortunately, that college student didn't have life insurance. Now, a lot of times we think nothing's going to happen. We're going to
Living our best life.
Exactly. Unfortunately, that happened, and the parents were very, obviously sad about the whole situation. In addition to being sad and losing their daughter, the other side of it was they had co-signed for her student loans. So now they lost the daughter. They have to absorb her student loan cost, funeral expenses, and all these things. Now, I know it's something that a lot of people don't want to talk about, like we were just saying, but I believe it's a necessary thing that everyone should have. And you should be talking to the right financial person to go over that. I would say my daughter, I have a daughter that's 10. I bought her a life insurance policy already, and she's already set up, because obviously we don't want anything to happen.
Right.
But you want to make sure you're financially prepared in case something does happen. So this way the family is protected. On the other side, we have also older clients that, we had a client, real life story, not my personal client, but one of my other friends worked with, went to breakfast with this client, signed all the life insurance paperwork with their attorney there, everything. They were doing some estate work. Then everything was signed that morning. That client had a heart attack that night and died.
What? Oh my God. Can't make this stuff up.
And it was $1 million policy.
What? So what was the outcome of that?
So whenever you're working with an agent,
Yes.
They're representative of that company, whatever the company that is, right? So when you sign the documents with that agent and you submit a payment, which that client did, it's binding from that day. So because they signed all the paperwork and submitted a payment to the agent, even though the check was not cleared,
right,
it's still considered binding.
Wow.
So the insurance company is supposed to honor that.
Yes.
And so there's different spectrums, but that's a great question. And I think you had a few other questions as far as like, how do you determine how much life insurance?
How much coverage do you need? I know you said age is a big factor when considering your life insurance policy, but you also gave us variances of $1 million policy or a policy that's lesser than that. How do you know?
So as far as coverages goes, it goes back to having that discovery meeting and learning about the client's goals. So I'm going to give you a couple examples. You could be talking to, a female executive, and let's say she has a couple kids, and she might say, You know what? If something happens to me, I have $500,000 mortgage, and I would like to send my two kids to NYU. So when you're factoring in those things, you start thinking about, okay, there's 500,000 for a mortgage, NYU, two kids,
NYU is
tuition.
pretty up there.
Yeah.
Tuition.
Let's say $250,000 each.
Right.
So that's 500,000 for the kids, 500,000 for a mortgage.
Mm-hmm.
All right. Let's say you also need capital and cash to support those children.
Right.
That's another discussion. How much do you make? How many years do you want to buy your children, for example, to give them some financial stability? So that might be another $500,000 or $1 million. So like in that situation, it's a discussion. It's collaborative. We're not. We try to discover everything with the client, so they can come to the conclusion as to how much life insurance that they need to protect their family. But in that situation, that person, like I have clients like that. I do have clients who are lawyers, doctors, executives. I have business owner clients who are worth $30, $40, $50 million.
Mm-hmm.
So I've been in every possible life insurance meeting you could probably think of. However, I would say in that situation, maybe, I've seen situations like that where the person will say, okay, I need like $2 million of coverage. I have some clients that have $5 or $10 million of coverage. And it can be, it can get up there.
So I have a question for you with the $1 million, the more heavier policies, I would categorize it as, right? What happens if you aren't able to afford it anymore?
So that's a good question. When a client takes out life insurance, they have to go through an underwriting process. So part of the underwriting is age. Health is a huge factor. The type of policy that they're purchasing, all of those things are factors for underwriting. Some of the life insurance policies will build what we call cash value or equity. If that client is purchasing a policy that builds cash value, then over time, 5 years, 10 years, 15, 20 years, that policy will have a significant amount of cash value or equity built in there. So if someone lost their job, for example, there should be equity in that policy once they've had it longer than 3, 4, 5 years.
Okay.
I always tell clients, you want to make sure that you can basically pay this policy for 3 years if you had no income.
I like that.
Yeah. So just to be on the safe side,
right.
And make sure your family's protected. But on those policies, typically within 4 to 5 years, there's equity that's being built in, and that can help.
Show me the money.
Exactly. Exactly.
So, go ahead.
Yeah. So I was going to say underwriting plays a factor, and part of the underwriting process, going back to being able to afford a policy like that, is they do ask, what is your career? What's your income? And there's some other financial questions that they will ask.
So you mentioned that people set up these policies to create generational wealth, to build a legacy for their families, right? What about if you become handicapped, disabled? What happens in that situation?
Another great question. So typically what happens on a life insurance policy is you can purchase several different riders. And a rider is like an added option. Think of it like you're going to buy a new Mercedes.
Okay.
And you're like, okay, I want the sound system.
Yep.
And I want the rims. And I want this. So life insurance kind of has features that you can customize on the life insurance policy. And one of those features is something called waiver of premium, or a disability waiver of premium. And in the situation that Zarifah mentioned, is that if that person became sick, injured, or disabled, typically if that rider is on the policy, after about 6 months, you still have to pay the premiums for 6 months. But after 6 months, then that rider will kick in, and the insurance company will pay your life insurance premiums for you until you go back to work.
Oh, didn't know that. That's good to know.
So we've had situations. I had a client. She worked at a bank. Nothing strenuous. She's at a bank. And one day she started having leg pains, and it ended up being some kind of issue with her nerve in her leg. And she was unable to work. So I believe at the time she was around 38, 39 years old. And typically with the disability riders, they can last until 60 or 65, depending on the company. So if she never goes back to work, she will have her life insurance policy paid for the next 20, 25 years from the insurance company.
While she's disabled, though.
Correct.
But if she goes back to work,
then she has to start paying.
Got it.
So
Okay. So don't go back to work. No.
Hey, exactly.
So my next question now is how, we hear people use like their retirement accounts, investment accounts to buy properties or make investments, right? How does life insurance, how can you leverage your life insurance policy to do that?
There's many different advantages to some of these life insurance contracts. Going back to building equity. So if you do purchase a life insurance plan that builds equity and cash value, I have clients who have used that cash value at different stages of their life. So I'll give you a few different examples. I had one client, he had a policy for maybe 7 or 8 years, but there was some cash value and equity in there. He actually lost his job. But what he did was he took some of that cash value and equity out of the policy to buy him 6 months of time to pay his mortgage, pay his bills, and look for a new job.
Does he have to pay that back?
Great question. It depends on how you take the money out of the policy. So some of the policies offer you what's called a loan from the policy. If you take it out as a loan, you can pay it back, but the payment is flexible. So there's no real fixed schedule saying, hey, you took $20,000 out and we need the money by next year or by this date. It's kind of flexible where you can take your time. If you wanted to, you could just pay $100 a month for the next 5 years or until it's paid back. So it's very flexible in that regard. So yes, you can pay it back, but it's very flexible.
Okay, that's good to know. So you mentioned something like the premiums, and how do you determine the premium with the value of the policy?
So let me, I'm going to just reverse back real quick.
Okay.
On the investment side.
Yeah.
When it comes to real estate and things like that.
Right.
So a lot of clients tend to, if they put a significant amount of money away, because they're very customizable, some of these plans. I have clients that put $500 a month. I have clients that put $1,000 a month. And I have clients that put $10,000 a month. So what happens is the more you put in, typically the more equity and cash is being built in that policy. And some people put more intentionally because they know that they're going to maybe use that money for something in the future.
So I have a question for you real quick.
Yeah.
So you said it takes about 3 years to start to see that equity, right? If I'm putting in more than my premium the first couple years,
it's going to build up faster.
Ooh, like that.
So it all depends on how we customize it. And this is another reason why I say you have to talk to the right financial professional or agent who has knowledge about these things.
Right.
I know a good one.
I think I do too.
So what I would say is that I have clients who have used some of the cash value to purchase real estate. They've used it to purchase commercial property, condos. I have experience in that where people have taken money out of their life insurance to purchase things. And I also have clients who've taken money out to purchase businesses. So they may say, you know what? I'm done working for corporate America. I don't want to deal with this anymore. And
Just
then
use their life insurance.
so they're like, listen, I'm going to take 100 grand out of my life insurance and start a business.
Okay.
and they bet on themselves. And,
Right.
and what happens is sometimes people will buy an existing business. They may say, you know what, I want to buy this pizzeria or something, you know. And everyone has different walks of life that they are going down. But life insurance can be a very interesting tool that can be used to help you get there. But going back to your premium question, basically the premiums are calculated by the insurance company based on your age, your health, and the type of plan that you're purchasing. So that's something that we walk you through and we go over. But it can be used for many different things. I mean, I have clients who also use the cash value. Let's say they keep a policy for 30 years. You purchase a policy at 30 and you keep building that equity for 30, 35 years. And when they're around 60 or 65, what they'll do is they'll leverage that cash value in their policy to supplement their lifestyle after they retire. So they may say, you know what, maybe I have 100,000 left on my mortgage. I'll take 100 from my life insurance and pay off the mortgage, so now I don't have to worry about that when I retire. Or maybe I'll use it to travel. I mean, people do all kinds of things. I have a client who actually took $50,000 out and said, I'm taking my family to Vegas for a week.
Do the thing.
I was like, knock yourself out. I don't know what to tell you.
Right.
You know, and people do different things. But yeah, the premium, that's how the premiums are calculated. It's based on mortality, health, you know, that kind of stuff.
How often should someone update their policy once it's created?
I would say a few things. One is that you should always review your life insurance policy, I would say every 2 years.
Okay.
However, if there's any major life events, then like a marriage, a child is being born, you purchase a new business, a new home, like those are times where you should review it, because maybe, for example, I know you work with some first-time home buyers.
Yes.
So now that person is moving from an apartment, let's say, to purchasing a huge asset, which is their home, and they may have a $400,000 or $500,000 or $600,000 mortgage. That would be a good time to look into life insurance.
Right.
That's a life event. And during that time, now they're buying this property for their family, and God forbid something happens a year or 2 years later where the household needs both husband and wife to sustain that house.
Right.
And God forbid one of them passes away. That could be really, really damaging, not only for the family, but for the children and everything. And I've been in those situations as well. I've seen situations, another quick story. Walked into a household. It was a referral from a client of mine, one of their sisters. Walk into the household. I see like 3 kids sitting on the sofa, and the wife is there, but I don't see the husband. And we have a conversation. She tells me husband never believed in life insurance in West Indian community. And he never purchased any life insurance. He was the primary breadwinner. He was out there working, got in a car accident, and basically they were about to pull the plug.
He was on life support?
Like he was, yeah.
Oh.
She's in this house, 3 kids. I'm looking at 3 kids in the sofa, and I already know what's going to happen. He has no life insurance. It's going to be a financial disaster. And like, I felt bad for them, but she was trying to ask me about what options and things that they have. But unfortunately, there's no options when it gets that far.
Mm,
So,
no.
so it's always good to do these things when you're, when you can. Doesn't matter if you're 20, 30, 40, 50, 60, 70, but when you do it, just try to get ahead of it, because when everyone says, I don't need the insurance,
Right.
until you need insurance.
Right.
and in that situation, I felt really bad because the sister was a client of mine, and I'm looking at these 3 kids and I'm like, okay, they're going to have to move out of this house.
Right.
The kids are going to have to change schools, and now they're going to lose all their friends from their previous school. There's a lot of factors that come in that people don't think about, and it could be damaging emotionally and financially.
Right.
And I always tell clients that when it comes to life insurance, you could never replace the person, but you have an opportunity to keep the family or the business whole financially.
Right. Right.
It's an unfortunate part of life. We all have to go. I've done all my planning as well, but at least, you try to set up your family or and your loved ones to have the right thing in case something does happen.
Right. Okay. So you mentioned that there are three types of policies.
Yeah, we can get like super detailed, but for the most part, there's term, universal life, and whole life.
Can you have more than one of them at the same time? And would you even recommend something like that?
Some clients have multiple policies, and some policies serve different reasons. So, give you an example. We had some business clients who were taking out a business loan,
Mm-hmm.
and part of that requirement for the business loan is that they had life insurance.
Wow.
So, because the bank wants to cover themselves in
Right.
case anything happens.
Right.
Exactly.
Right.
So, with the business loan, we had to help that client get the life insurance for the business loan. But in that situation, they utilized a term insurance policy because they felt like if the business loan was 10 years, they were like, okay, I'm going to do a term insurance policy for 10 years to
Got
cover
it.
that loan. Some people, if they have a longer loan, they might get a 20-year policy, a 30-year policy. It all depends.
Got it.
We also work with some business partners who want a cash value type policy that builds equity because they use that money sometimes to buy out another partner.
Oh, that's very strategic.
So let's say, all right, you purchase a policy and you got this partner in the business,
Mm-hmm.
and 10 or 15 years from now, your goal is to buy over their other 50% shares.
Right.
But now you're building equity in your policy, and that becomes your game plan, and
Now you buy them out.
your capital 10 or 15 years from now, you're like, okay, you know what? I'm going to take this money and I'm going to buy over their shares
Nice.
with that money. And now you become the sole owner of the company.
Right.
So it's kind of like forcing you to protect your family and your business, but it's also forcing you to save money. Some people are like, I don't want to spend money on life insurance.
Yes. Yes.
But it does help by, forcing yourself to save a little bit.
Right. Okay. And you also mentioned tax incentives. Who doesn't like to save money?
So, full disclosure, I'm not an accountant.
Okay. That's
However,
fair.
However, what I will say is that there are tax advantages to having life insurance.
What are some that you know of from your experience?
So I'll give you like one example.
Mm-hmm.
Let's just say you have a cash value type policy and that's building equity. And you have this policy for 20, 30 years, right? Chances are, with all the interest and everything that you've accumulated, I'm just going to throw out a number, just for example. Let's just say you invested into that policy or saved into that policy $200,000 over that 20 or 30 years. That policy might have $500,000 in it at that time. Now, let's just say you put in 200, but the policy has 500 in cash value, 500,000. you're like, okay, you know what? I want to take some of this money out. Let's say you take out the $500,000, for example, or 400, whatever you need at the time. But for the purposes of this exercise, let's say 500,000. So you take out $500,000 from the life insurance plan. That 500,000 can be taken out as a loan from the policy. So because it's being taken out as a loan, there are no taxes. So you put in 200, you took out 500. So you technically got the other 300,000, which is gains.
Tax-free.
Exactly.
Ooh.
Because you're taking it as a loan
Yes.
out of the policy, and you don't tax loans. Now, if you need to put it back, you can. Like we were saying, you could just continue paying your premiums. So the caveat to all this is that you have to keep your life insurance policy.
Got it. That's the catch, right?
If you were to cancel your life insurance policy, then they would tax you on all the gains.
Oh, so okay.
So
You locked in.
yeah. So well, it's life insurance, right?
Right,
So
right.
it's meant to be kept for your life.
Right.
So you want to keep your life insurance policy active, and not abuse all of the cash value that's in there.
Right.
But in that situation, let's just say the policy was worth $1 million, the overall policy that was going to go to the beneficiary.
Right.
But you took $500,000 out. Let's just say for some reason you have the money, the $500,000 in your pocket, and for some reason, God forbid, you passed away a week later, right?
Mm-hmm.
You never paid that $500,000 back. So what an insurance company will do is deduct that $500,000 plus whatever interest there was from the $1 million.
Got it.
So you still had the $500,000 in your account. Your family still inherits some of the life insurance, but the insurance, you never technically made a payment back to the insurance company.
Right. Right.
So
Okay. Well, thank you for dropping all these gems on insurance. I mean, life insurance, right? Is something, as you mentioned, is not discussed enough. I agree with you with being proactive, as I specialize in wills, trust, and estate planning. And, that's something I advocate for my clients as well. Like, as soon as you accumulate an asset, start, building the getting the protections, right, that you need to put in place to hopefully pass it down for generations and generations and generations, being prepared. And
I do have one thing I would like to add to that, what you're saying. We do work with a lot of attorneys, and part of the estate planning process involves insurance.
right.
So if you're working with any high net worth clients, or you're high net worth clients, and I'm talking about clients who are worth 15, 20 million, 100 million, those clients typically need strategic and a higher level of planning. And that's why we work with a lot of attorneys in that regard.
Right.
So in that scenario, there's ways to utilize life insurance to help pay down any estate taxes that might be owed to the government if that high net worth person passes away.
Nice.
So, but we can get into that another time,
Yeah.
because that's very strategic and detailed.
Yeah. So, Riyaad, thank you again for taking the time to sit down and speak with us. I do ask that you just let us know why you. You've been in the industry for 16 years. You're caring. You want to make the community know about how to create generational wealth, but why you as opposed to other insurance agents?
Great question. So first off, I'll start by saying you can reach me at 718-739-4622. Anyway, what I will tell you though, why me? I've been on over 1,000 face-to-face appointments, like in person, not Zoom,
Yeah.
like in-person appointments with families and business owners, specifically for life insurance. I have the knowledge and I have the experience to understand what's important to that family and what they're trying to achieve. And I think that separates me from a lot of people because I'm willing to listen to what that family needs or that business owner needs. I'm willing to also educate them on things they may or may not be aware of that can help their family. Fun fact about me is, although I love to go to the gym, I'm also a little bit of a nerd.
Yeah. That's for sure. No, I'm playing.
So, at one point,
Yeah.
when I started off in my 20s, I realized a lot of people ask me that question. Why should I work with you versus, my guy that I've known for 30 years?
Right.
And that made me work even harder because I realized I couldn't catch up with experience, but I couldn't catch up with knowledge.
I love that.
So I would actually work full days, meet with clients, and also spend 4 hours a day studying
Nice.
until I learned everything.
Nice.
So I wasn't able to catch up with the experience, but my knowledge base was equal to someone who's been in the business 40 years.
Right. Right.
I would say it's a little bit of knowledge, some compassion, and I go into every meeting with a pure heart
Yeah.
because I really genuinely love helping people.
Yes.
And I want to make sure that that family or that business owner is better off with me there in their lives.
Right.
And which is why I became successful, because we get a lot of referrals. I have some families where the whole family is my client. All the brothers and sisters, the aunts and uncles.
Nice.
At this stage of my career now where maybe I had the mom as a client and now that I have the children as clients. And it's a good thing, because you really are going in there with a pure heart to help people. And that's what I love to do. Yeah. And hopefully I can keep doing it for another 20 years or so.
Yes. Yes. Well, thank you again. And do you have anything else left to say to the people?
I just want to say thank you to Zarifah and, hosting this and also getting the knowledge and information out there, because there's a lot of people that need our services and they're afraid to ask for help. And, I'm really appreciative of even being here and being able to communicate with the people and with you, obviously.
Yes.
And, the only thing I would have to say is,
Call you.
Yeah. Yes. And don't be afraid to ask for help. And, we, like I said, we work with all kinds of clients: teachers, doctors, lawyers, nurses,
Entrepreneurs.
a lot of real estate agents, a lot of mortgage people. But yeah, I'm here to help at the end of the day. And that's what we love to do.
Thank you guys, and stay tuned for the next episode.